And so I think that, swing trading I could do, because that I can do more along the lines of timing and picking and choosing when something's right over the course of a week or 2 weeks, and then recognize a time to strike, and then swing over the course of several weeks, rather than trying to get in and out of a position within sometimes even less than a 30-minute time period, or maybe even less than a couple-minute time period, depending on how big your trade sizes are. I mean, I've seen some people getting in and out within less than 5 minutes, easy. And so I unfortunately just didn't have that amount of time to focus on a day-to-day basis, and it's something I want to try in the future for sure. Maybe as I continue to grow my portfolio, and I'm then able to get more, say, financially stable, where I can kind of take a step away from the business world and focus more on my personal businesses. I might take a portion of that portfolio that I don't need in terms of income to supply my expenses, and see what I can do. Maybe it'll be 10,000, and see how I can grow that. But it's a catch-22, because I understand what you're trying to do. You're trying to get a small kind of sum of money together, double it, and then try to go into something a little bit more conservative. So you're trying to get a little bit more risky now because you're young, and try to get into something more conservative. Am I right in saying
Yes,
that?
exactly. That's exactly what, spot on.
And so I don't see any fault with it, other than I'm a very conservative, risk-averse sort of investor. And so if you're comfortable with the risk, it's all up to your personal investment settings. But for me, hearing someone in your age, if I were to be going back to where you were, or where I was, at 18, I'd just be like, just put your money in stocks, man. Like long-term dividend-paying stocks. Because by the time I was 18, when was that? 2008, 2009. So it was like 10 years ago. So I wish I was buying throughout the Great Recession, and buying at the lows, buying Citibank before it split, a reverse 10-1. It was trading at like less than $3, and then it reverse split. Like, you think about it now, some of these stocks like Bank of America, Citi, the amount that the dividends have just exploded in some of these corporations has been absolutely phenomenal. Like,
on
cases,
the dividend. Quick question for you, though. Sorry to interject here. How much are you currently trading with?
Okay, I started with. I've been on the same account of money for a second now. So I started with 100, fell down to 8, and now I'm back to 47.
So $4,700.
Yeah, no, just 47 dollars in my account for my.
Oh, so you're never put in a really small.
Yeah, I didn't. That's what I'm saying. With you can have a good leverage size. So like I have a 1 to 500 leverage when I leverage it through my broker. Yeah. So I can do like my 0.01 lot sizes, like 10 cents. And then I'll set my I don't know how to really get even to explain it, but
it's good to mess around with, man. On a small level, it's best to be doing what you're doing right now, just because I started the same way, man. I started with day trading, like about $400 or $500, but it just you can mess around with it, man. See how it works out for you. If you find a good pattern that works, keep doing it for sure. If it can make you some extra income, but it's hard to say at your level unless I would more or less just try and build up your I don't know. Security guards usually make pretty good money. My buddies used to do it, because we used to DJ some clubs and stuff.
It's just right now it's winter, like December. Yeah, no one's really having gigs. Only got 3 days of work this month. So
yes, so it's probably more important that you focus on finding and building up another source of income, then more or less, right?
Yeah.
Because what you need is power, so you need some horsepower, filling that up. But if you're looking, security's not a bad start either. Finding private jobs is where most of the money is going to be at. But yeah, it's hard to tell an 18-year-old how to do it all over again, because I mean, I was probably right around your age when I took out a $20,000 loan. So I mean, if you got zero debt, I mean, you're already doing pretty good. Do you have any debt?
No, I stayed clear
you went
of
to
that.
school for a little bit. Hopefully, you didn't plunge yourself too far.
No, when I dropped out, I had some financial aid.
Do you have any debt or anything?
I paid financially? That. I've had a few thousand saved up still right now that I'm still sitting on. So that's what I wanted to use towards my investing. Or I could use that as my emergency fund and then rebuild up another
you're lagging out a
investment.
little bit.
I think it might be you, Kyle. But so my question is for you. When you envision your long-term plan, so you're, let's say, 50, 60 years old, what are you envisioning? Are you envisioning getting paid by dividend stocks? Are you envisioning more along the lines of having to trade forex on a day-to-day basis to get your income? So what's your end goal, I guess, so that way we can try to understand how to get you from one place to the next?
I want 7 streams of income.
I
I just want to be a millionaire, Like, I feel like that's kind of been my dream growing up. It's just like that millionaire status would be just nice. I don't know, just growing up and like not having all the things like that I wanted necessarily. It just made me want to go get it myself and go be hungry for it and go get it. So I just, and then be able to take care of my future family once I have one. Have no worries about traveling, and then I don't know, taking care of family too. I think that's always been kind of something I hold closer to me. I want to be able to help everyone around me.
No, those are really good goals. Those are really good goals.
I know how money can be like pressing on people, and I just don't want people in my intermediate life to be oppressed by money. So I want to kind of provide for all. That's kind of, I know that's kind of like really far-fetched to do that because you'd have to have lots of money to do that. But like that's my goal. That's what makes me hungry.
Well, luckily, I mean, you're 10 years younger than me and Kyle, so you're going to be starting off 5 or so years before we even did. So in that respect, I mean, if you find a plan and a strategy that works for you, I mean, you're definitely ahead of the game in that respect, because I think most people, in all honesty, even being 28 and 27 like me, are you 27, Kyle, or are you 28?
Yeah, no, I'm still 27, so still a bit young.
Okay,
we're
yeah,
all still young.
So instead, we're still young, right? But compared to our peers at 27 and 28, we're still in the minority for sure. I talk to people in the office that are even mid 30s, and they still have, I guess, problems getting started and understanding. And I think it's honestly just the financial literacy of things and it not being taught in schools. And but yeah, I mean, the youth that you have is definitely to your advantage, and especially if you can tone your investing strategy over the course of a year or 2 years, it'll definitely be beneficial for you. It took me, like Kyle said, I started trying to day trade penny stocks, and then I dabbled in growth stocks, and I didn't do well with that. And so that was starting in 22, and I probably feel like I didn't really start hitting my stride until 24. And even still at 24, I was still dabbling in and out for a year or two, trying to do growth stocks and do dividend stocks at the same time. And then I eventually landed on dividend stocks. And I'm not saying that that's going to be your path, because it might not be. But I'm just saying, you have to try to find your strategy that works,
Yeah, so I mean, you're better off than we are, just because of the fact of time you have on your hand. I don't want to get too much on the day trading side of things, because I don't know how much success you've had with it. We haven't had success with it, but just to give you like a base understanding, if you want like passive income sources, you're not only going to have to look outside of the stock market, but you should be using the stock market more of a tool for passive income. Because I'm just saying, most people are going to fail at day trading, but the thing that you have over me and Matt right now is a decade. And a decade, even putting like $500 away a month, if you can just get like an index return, like a Vanguard index. I already ran the little compound calculator on my phone, but you're going to end up with like $105,000. So you can put away half as much as I've had to put away over the last 5 years, just because you have that extra decade. I've had to put away about $1,000 a month for the last 5 years to get to like the level that I'm at. But if I had your time on my side and I could just find a way to inch like $500 away, barely $125 a week. If you can just find some part-time work and just kind of hustle that in, you're going to be like way better off, I think, than trying to day trade. That's just a recommendation. Like I said, you could be, if you find a pattern that works, go for it. But just from like mine and Matt's stance, and because we're so passive income focused, and we're trying to do exactly what you're doing. Like we're just trying to build different sources. So me and Matt are running websites right now. We're doing the YouTube stuff. Always got something else on the go. But you just kind of want to start with something and then try and move on from it. So that way you don't have to think as hard about it. Because when you get into day trading, man, it's a full-time job. And the question is it going to be worth like 3 years trying to adjust to, or is it just going to be a 3 years and flop, and then you're going to have to change patterns? So, I mean, my bombshell, because I pick individual stocks, as Matt does as well. And the bombshell for me, man, is just having the intelligence that if it does go wrong, to stand up and have a fallout plan. Because my fallout plan has always been index funds, because every single investor, even the guys behind bank desks, all have to compare themselves to the S&P 500. So, I mean, if you can't outperform the markets on a consistent basis over 2 years, I mean, it's a good time to start adjusting the strategy. So, I mean, I've always just left that in the back of my mind. So I'm always watching the chart at the end of every month. I'm like, I wonder when the day comes that I finally screw up as choosing individual stocks, because statistically people fail at it. So, I mean, I'm always worried still. But just a thought nonetheless. I didn't realize you were so young into this, man. I'm trying to read some comments here. Got any other questions for Matt? I'm going to read through and see if anybody else.
I'm trying to find some good nuggets in the comments here as well.